The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we headed into the weekend with a fairly quiet trade overall when things were said and done. We were lower in the soy complex much of the day, tried to get it back near unchanged. Wheat fell off its highs near unchanged. Corn kind of drifted as well. Live cattle found some decent strength ahead of the cattle on feed report. Outside markets were quiet, but there's been plenty to take a look at that's happened here the past week in the trade plus. So let's dive in and get a recap. Joining us for market analysis, Christy Van On. She sits with Van On and Company. Christy, welcome back to Market Talk. Thanks for being with us today.
Yeah, thanks for having me.
Let's take a look at this trade action from Friday. Grains in particular, let's start over there. And as I kind of said, you know, when everything was all said and done, pretty quiet on the futures on the day. Maybe some of that harvest pressure weighing in, but yet, you know, we got that rate cut this week. What does that mean for the dollar and exports, et cetera, et cetera? I mean, just a lot of things kind of thrown at this trade. And I guess, if anything, we've been testing some key moving averages at really all of these grain markets here this week, haven't we, Christy?
Yeah, I feel like these markets are coiling so much, it's not even funny. We're consolidating into this little range and not really moving anywhere, to be honest. So I would envision that $4 is a psychological hold on December corn. The low of December corn is 385, and I do feel like that is kind of that low has been put in. Could we test it with some selling pressure? I think maybe we could, but overall, I honestly think that December corn is so stuck in a range right now that we're kind of 20 cents down, maybe 20 to 40 cents up. I do feel like corn has that solid support underneath it. And same situation for beans. About 10.20 seems to be the level on November beans that just stops the market, and we can't really accelerate past it. If we can get a close above that, I do think it opens up some top side to 10.42 to 10.60. Those would be our targets that we're looking at. But overall, that's really just dictative on Sunday evening how these rains or lack of rains for Brazil are in the forecast. So, anytime you have a market at the mercy of weather, it gets just a little bit dicey. But also in the same logic, I feel like $10 is that support as long as you trend a little bit drier in Brazil. Now, if we come in on Sunday night and they have built in those rains for the extended forecast, I do think that beans could go lower and really test those lows 9.55, and then working forward even maybe a little bit past that. The seasonal chart on soybeans is not pretty for the next 2 weeks. It's very strong seasonal to the downtrend, and so I'm trying not to get too bearish because you don't know if it's going to rain. I don't know if it's going to rain, but I just feel like the writing's on the wall that if that precipitation shows up, there's a lot of negative things that could come at the soybean market. And I also think harvest activity is one of those as well. Yield reports have been all over the place when you start to see them on social media, but I do think that overall people are a little bit, okay with their bean yields. Maybe you weren't as great as years prior. So last year, kind of a similar situation. We just had some really good rains in August, and these beans looked beautiful, and you really started to people up their yield potential, right? And then we kind of didn't fill those top pods, and so it was a different situation. I think that's similar to what we're going to experience this year, but overall, we feel pretty confident that there's a big crop out there, right? So even if we get a downtick on yield on both soybeans and corn, I don't think it changes the dynamic much. We still have, especially in beans, too much around.
You've been traveling quite a bit lately, and I know you've been talking with a lot of producers, and I'm sure maybe you've seen. I know I've been seeing some of the funny videos and reels on Instagram or the TikToks or whatever. A lot of farmers trying to make light of some of the price action, thinking back. Hey, we just had $12 beans, a year ago, and now we're at 10. Same with corn. We had $6 corn, and a lot of folks didn't necessarily do enough marketing. I mean, all the joking aside, it's a tough conversation right now. So what are you telling producers as we navigate some of these lower price levels in this grain trade broadly?
Yeah, this time period is one of my least favorite time periods of the year for my work, my work-life balance, right? So
Yeah.
the end of August into the beginning of September, there's always these people coming out and saying, hey, I have old crop around. I don't have anything marketed and I don't have enough storage. I think bagging systems have semi solved some of those concerns, but it's not fun to bag a crop. So, you have those issues as well. But really what I'm saying right now is focus on what has to go to town at harvest. So everything else, let's create a game plan for post harvest, but let's focus on those bushels. Right now, I'm focusing on soybeans, and I'm saying a lot of these areas have seen a push in basis leading up to harvest. And so I'm taking that and I'm cashing out beans and I'm looking at it and I'm using those same targets that we talked about earlier, saying if we get above 1020 on a close, I would then defend and look at a call because maybe something bigger is about to happen. The November options are pretty cheap right now for soybeans, but I don't think that's enough time. You can go to a January option. I'd like to get even further, but a January option at least expires on December 27th. So I think that's the ticket, is at least get to that time frame for a call. If we don't get above that level, I'm not going to be looking at a call, to be honest, right now in soybeans. Maybe 2 weeks from now when the seasonal tendencies start to switch, I might look at one, but as of now, unless we break above that, I'm not participating. If you have to sell corn right now, a little bit of a different situation. I'm being a little bit patient with the goal to have it sold by harvest. Our targets are still 426 off December corn. Really, it would take that close above 414 to activate those price counts. So I'm being a little bit patient. If we fall below $4, I would maybe, honestly, I wouldn't even defend. I would at that point maybe even look at a courage call to sell into and just say, hey, I could look at a 410 call and just work an order at the elevator to sell at 410, knowing that those bushels have to go to town at harvest. I just don't think there's a lot of range. Post harvest, that's a little bit of a different situation. I'm being a little bit patient on it. If you're coming in here and saying, I need cash flow sooner rather than later, I have no problem doing some HTAs right now for January or March contracts for beans or March contracts for corn. I think that you could get some favorable basis into this December to January timeframe, and I would make a start on that. These prices obviously are much lower than what you had opportunities at, but that doesn't mean you shouldn't be doing here. Luckily, most of my guys have some higher bushels, so it's helping the situation a little bit. Doesn't offset everything, but at least we're having a good crop for many people to help kind of offset the lower prices.
If you had to pick one of the main ag commodities that concerns you the most right now for downside potential, which one would it be, Christy?
Soybeans, like without a doubt. So, and I could eat crow on this, right? If you stay dry in Brazil, I mean, you are going to rally this market. You are going to put a ton of premium. And to be honest, if you turn dry and don't get those rains in Brazil, I personally think it's more of a corn story than it is a bean story, because the potential for production out of Brazil for soybeans is so huge that if we have a problem, you're still looking at a very large production out of Brazil for those soybeans, right? The problem would be you're dry, you're pushing back planting at that second corn crop. I still think the attention is going to be brought into beans on buying them. So I think that that's it. I also think that a lot of people like to talk about the presidential election, and I think that if there was any commodity that was going to be affected by the presidential election, it would be soybeans out of all of them. So I just think that there's a lot of risk on the table right now for soybeans. We have a very large carryout. I mean, you look at where our carryout is right now for soybeans, there's a lot that needs to change to make that a manageable carryout. And I'm not saying it can't happen, because it can, right? If Brazil stays dry, it's kind of like a double-edged sword. So I do think if it stays dry, you're going to get that attention of buying. You're also probably going to see China step back in to buy some more soybeans just to cover their needs, just in case. So I think that could build. But overall, the fundamentals are just so much different on soybeans domestically and worldwide. Our world carryout right now on soybeans is huge. It continues to grow. And corn and wheat just have a different situation. We're at a 2 billion bushel carryout in corn right now. That is a manageable carryout. And I do think that the yield we got from this last report could be one of the most favorable, or one of the highest yields that we see moving forward. Not that it needs to drop off a ton, but I think it could be one of the higher ones. And so I think that you could come in here and say, I'm a little bit on the friendly side of corn. But when I say friendly, I'm, like a little bit, right? Like, let's not get ahead of ourselves. Our targets are 426 to 447. It would take a close above 447 for us to take the corn market real serious, that there could be more potential out there.
Christy Van Cheeses with Van and Company is our guest analyst here today on a Market Talk. Christy, we have not talked wheat yet. Spring wheat yields sound really good from what I'm hearing across much of the northern plains into the Canadian prairies. Yet on the other side, it's been a little dry for U.S. winter wheat planting. There's rains coming this weekend, it sounds like. Russia and Ukraine have issues. What's your view of this wheat market picture right now?
Yeah, if I had to pick one commodity that I think, out of the core three that could do something, I think it would be wheat, right to the top side. I think that there's enough little stories in there. And also, I pull up a world carryout chart. Maybe I'll throw it on Twitter here later after this gets posted. But really, when you separate China out of the equation for world carryout in both corn and wheat, it's a much different story. But even in wheat, you see that kind of that shrinking carryout, and we know how important wheat is throughout the world. So I feel like it's a little bit of a ticking time bomb for people to wake up and realize that everything is not perfect around the world for wheat, that there are indeed still major issues in so many different countries throughout the world, especially Russia and Ukraine. And so I think wheat has its moment, maybe waiting until more like first quarter to be able to do that. We also kind of like hinted at it in the beginning when you were doing the intro, but interest rate cuts, I do think eventually are going to be favorable towards commodities. And I think that you're going to have people kind of taking the sidelines and looking to buy into commodities. And I think that you're going to see that buying help support them. And once again, I think that could be wheat along the way as well.
Yeah, when you think about the Fed rate cut, does that move, there's been a lot of talk about money moving to the sidelines out of the equities and things like that ahead of the Fed rate cut. Does some of these moves in equities, does it force funds to cover some of their shorts in some of these commodities, things like that? I think there's a lot of dominoes still at play here in terms of the broader equities markets and how they play into the ags right now, Christy.
Yeah, I think so. I think that typically you do see that buying come into commodities when you start to see these type of a situation, taking their money out of it, sitting on the sidelines or looking for another place. And to be honest, if you're an investor right now and you're saying, hey, inflation has taken its toll on so many things. What are we not seeing drastically higher than we were pre-2020? And that's going to be commodities, right? They are the ones that don't. And I saw a really good question from somebody that was like, why do commodities not follow inflation like everything else? And it comes down to the fact that you still have a supply and demand driven market for these products. And we have so much supply and we've been able to keep up with it that we haven't had those supply issues. Therefore, you haven't seen those massive rallies. And so I think you could see investors want to come in and buy commodities. I think it would be a good buy for them to look at it. And like you said, manage money to cover some of those shorts. They have been covering some of these along the way, especially for the corn market, but it's not just manage money. Index funds, right? Index funds cannot be short the markets, but they are really down there. So they're looking at just one of the shorter holdings that they've had, the least amount of longs they've had on in quite some time. And so you do have the writing on the wall that if you wanted index funds to come in and buy, if you wanted managed money to come in and buy, you could really support that market. I'm just hoping it happens a little bit later, not quite yet, because if we have it happen now, I think a good chunk of that rally could be offset by selling pressure at harvest. So I'm hoping it comes more into that Q1 type of a time frame.
And thinking about the equities and the movement there as well, and just how the inflation play has played into, traditional corn, beans, wheat, it really plays into everything too. I think about, canola, rice, cotton. Cotton's been super volatile lately. I mean, some of the other markets that we don't talk about a lot here on the show, we need to do more. But I mean, there's been a lot of different moving parts, and cotton stands out to me in particular, just the volatility we've seen there in the last week or so, Christy.
Yeah, I think so too. And honestly, those targets that I've been talking about for corn and for beans, those topside targets, saying if we could just get through those, I think you really extend and open up those price counts. That's what cotton's done. For the longest time, cotton was not able to get through this $70 mark off the December futures. And once we were able to get above that level, you really brought in quite a bit of buying to try and lift it up. So I think that you could lump cotton in with wheat being one of those markets that could be supported coming into the beginning of 2025, especially if it continues to trend drier as we move forward. And I think some of those initial forecasts are for winter wheat country, cotton country, to be a little bit on the drier side. You're seeing these storms come up and staying a little bit too far east to really replenish the soil moisture there. And so I wouldn't be surprised if you continue to kind of see the drought monitor perk back up for those areas and gain the attention. So you have this fundamental story of drying out in those areas, paired with a technical situation where you got above the key resistance and you can find some buying. It looks really good.
Livestock trade too, as we talked about this a lot on the show. It's been, for the most part, closely tied with the equity. So you see a big move one way or the other in the stocks, and cattle and hogs are right there with it seems like. And I think we kind of got that Thursday with the Fed cut. Come back in here Friday ahead of an on-feed report, and we're talking ahead of that report release as well. But live cattle had a good day. Your perception in this protein sector overall right now, Christy, what are your thoughts?
Yeah, we got through some key moving averages when you look at the chart for feeder cattle and live cattle. So that's the number one thing, right? So we have a cattle on feed that can trump the technicals. But as of now, the charts look really great for cattle. We moved on marketing today for live cattle. So we bumped up from 60 to 80% marketed for fourth quarter and first quarter for live cattle only, just because we were worried about what could possibly come out of the cattle on feed. We do believe that you should reward a rally. And when you look at it, we have bounced significantly off the lows for that. And you also look at kind of the long-term situation of interest rate cuts. Sometimes it ends up being negative to the stock market as you're kind of trying to get through and deal with the repercussions and say, hey, it's this delicate balance of saying, hey, we can lower interest rates. We've done a good job on inflation, but we need to make sure moving forward we're not seeing some poor economic stats. And sometimes you can start to see that after that, and that would be negative toward the cattle market. So we rewarded this rally for live cattle. The charts look good, but once again, we got to get through this report this afternoon before we can really move forward on it.
All right, Christy, as we kind of wrap it up here today, we appreciate your insights. Final thoughts. What do you want to leave producers with? Grains, livestock, the whole boat. I mean, what do you want to remind folks as we kind of navigate this current window and some of this down cycle in the ag economy that we're talking about a lot right now? What do you want to leave folks with here this week?
Yeah, I think, I was at Big Iron up in Fargo here. Was it last week? Yeah, I think it was last week. Everything blurs together, right? And so it was, kind of like guys were really depressed, right? You're talking about these prices. You're talking about guys that really got caught holding grain too long and don't have the marketing done that they're supposed to. You talk to grain buyers. They have a fraction of what they need booked. So it's being confirmed by both the farmer and the buyer that it's just not sold yet. And so I would just say, take things a little at a time. I have a lot of people that are so just rip the Band-Aid off mentality, and it doesn't have to be that way. I know you don't like these prices, but if we get a rally, reward those rallies in small increments. Right now, options can be used for reownership if you really want to. I don't think they necessarily need to be used right now, but if you want to, they are cheap and they are going to be kind of in your back pocket saying, hey, if something bigger happens. But really, for the most part, just make those small incremental sales and make a plan moving forward, saying, hey, I want this many bushels out the door by this time frame. If I see this type of a basis, I'm going to move on it. And if you can just sit down and write those down or mentally think through them, plug them in your phone and just say, I'm going to stick to this, I think it takes care of so many things for a producer.
Christy, if folks were to reach out for a conversation there with you and the team at Van On and Company, how can they get a hold of you?
Yeah, you can call us at 1-800-648-5494.
You can also find more at vanonco.com. Christy Van On, she's with Van On and Company. Thanks for joining us on Market Talk. Appreciate it. We'll talk to you again soon.
Thank you.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.